Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to keep to its bearish tone. After initial downbeat Chinese data, the market inches closer to the support level seen at 74.70, also known as a key level. The Chinese Caixin manufacturing PMI came in at 51.3 from 51.8 expected, and May 52, showing that the overall health of the country's manufacturing sector is slowly deteriorating, given by those numbers. Looking ahead, we've still got initial pressure on the support for the Australian dollar. Now, if we take out the level of 74.70, could see further risk to the downside and bring in the objective or expose the region of 74.20, where I do anticipate potentially some profit taking coming back into play. So we put 72.20 there. You can see that the market overall should find some support here and therefore could see a rebound. But for now, I do expect to see further downplay. Along with that, the US dollar, which measures the greenback strength against a basket of 6 major currencies, now hovers near a 3-month peak at 92.40 after the overnight price action surged about 30 pips, and that put pressure on most of the currencies. So keep an eye on this support. Technically, the bears and also are in place with the MACD, the RSI, and a trending bearish ADX. The euro remains heavy for the 4th consecutive day, while the US dollar, the USDXY index, hovers near 3-month, as I mentioned earlier, at 92.40. Now, for some of you may or may not know, the euro is weighted at 57.6 to the dollar. So therefore, if I feel that the euro can actually get to its objective around 117.50, which is about 90 points away, that gives ample room for the dollar index to reach its objective of 93, which is 60 points away. So nevertheless, let's see how the market plays in tonight. We've got a few figures coming out. We do have the unemployment claims, and along with that, we've got also the non-farm payrolls number tomorrow, which is seen a forecast of 675,000 with the previous release of 559,000. While the unemployment forecast is expected to drop to 5.6 from 5.8. Technically, the market's a little bit oversold, but the trend still showing a bearish assessment. So if we take out this level of 118, I believe it's at 40, not 60. If we take out 118.40, then we could see the market drop lower, as I mentioned, to 117.50, where profit taking may emerge. Keeping in this upward channel, you can see here the market has actually posted a strong course correction away from the bottom side of the range around 109.50.90 and looking back to this top side range around 111.05.25. It is assessed that the market may again reject this level and see the pullback towards the support region, which is roughly close to around 110.30, and reassess, because if we break that level, then yes, we'll be going down to 109.50. But at the moment, the technicals are a little bit further due to the strong candle that came through last night. So let's see what eventuates from the challenge if we see it into the European session or New York at 111.05.25. The pound remains on track, that is, to the downside, and looking towards that objective, which I'm still holding presently at 137.40.50. We're seeing a bit of a pause here at the moment at 138.10, but I feel the market can actually take this level out. If you feel about the whole pattern here is that there'll probably be some potential stops due to the recent strong candle. So a break under 137.90 could be that 50-point move before the bulls step back in around that 137.40.45 and reassess from there. The ADX is trending to a bear case, and along with that, we've got the MACD and also the RSI married to a negative outlook. So with the return of yen weakness, is that we saw a little bit of a revive, that is, of the sterling yen. Nevertheless, I feel the market technically is not confirming this candle, and therefore I do hold the view still towards 152 figure 10 and reassess from there. A very choppy price action overnight, and as you can see, for the third attempt on 1760 was rejected. Keep an eye on this pattern, because if we close above 1773, so it was 70 in New York this morning, so we didn't get the close, but we're trading a little bit firmer. I'll be interested to see if the gold can actually recover due to the dollar index being around 3-month highs. As you can see before, that strong candle 2 days ago can emerge easily again. Now, if we take out 60, that exposes the level around 1720 as a potential trajectory. And the top side, well, we close above 73, New York, that would give at least some room to squeeze up towards that top side of 1800 before reversing. But I feel at this stage, not likely, due to the fact that the technicals, although mixed in terms of a negative MACD and a potential weak signal to support a positive case for the RSI, the market's going to challenge into the European session, which I favour down. Wrapping up with oil, the market now gets prepared for the OPEC meeting, which is out later tomorrow. They're keeping their eyes on what can eventuate out of that meeting, and therefore could see a little bit of whipsaw price action, but I feel the market hasn't reversed as of yet. Until we get a close above 73.75, and I still believe the bears will be looking at this trigger level, which is at 72.05, which was rejected a couple of days ago. If we get a break there, then that would reinstate the downside to $70 to about 68.5 as a potential target. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.